Hey folks, Dividend Gardener here. Two Canadian brokerages have just made announcements that I think could be game changers for Canadian dividend gardeners, and these both link directly or indirectly to fractional shares. If you're not familiar with the idea of fractional shares, think of it as the difference between buying an entire pie or just getting a slice of pie. So instead of having to buy 1 or 2 or 10 full shares, you could buy as many shares as you have money to invest. Maybe that means buying 3.14 shares or 2.718 shares or even less than a full share, say 0.001. It basically lets you say, all right, here's a stock that I like. I'd like to put $50 into this stock, and I'm not going to worry about the share price so much. I just want $50 worth of it, and then you get your fractional share back. The nice thing about fractional shares is that they provide accessibility for smaller investors. It becomes a lot easier to plant your own balanced dividend garden using fractional shares than it does trying to navigate some shares that are maybe $20 a share versus having to wait to buy a stock that's, say, $300 a share. Let's take a look at a real example here. Constellation Software. This is a tech company, a Canadian tech company that pays dividends. The share price is over $1,900. I can't afford that now, and it might be years before I could ever really afford that in terms of how I want to balance and build my own portfolio. If I were really focused on obtaining a share of Constellation Software at this point in time, given that it's not really available to buy as a fractional purchase just yet, I would have to stop investing altogether for months at a time just to build up enough of a savings to get just one share. And in the time that I'm saving up my money every single month to eventually buy that one share of Constellation Software, in that time the price could run up even higher. It could be even more expensive than the day that I decided I wanted to make that purchase in the first place. Look at Amazon. It's more than $3,700 a share at this point, and that's in US dollars. That's $4,600 Canadian at the time of me recording this video. That's more than half of what I invested total in the past year. So smaller investors feel like they get left out a little bit. They don't have that amount of money to purchase one full share of a stock. And for a smaller investor to get exposure to companies like Amazon, which trades at $3,700 US dollars a share, for a smaller investor to get exposure to a Constellation Software at over $1,900. And I mean, those are extreme examples. You could argue that a stock trading at $100, $200, $300 also starts to become inaccessible to a lot of investors. For smaller investors to get exposure to companies that have high share prices, like Amazon, like Constellation Software, smaller investors have to purchase an ETF. But that aside, we're talking about fractional shares, and we've got some exciting news. Wealthsimple Trade has started to roll out fractional share trades. This is an awesome move. For my American dividend gardeners, I know that fractional investing is already really common in the US, so this seems like it might not be such a big deal, but you'd be surprised that fractional share investing is actually pretty rare in Canada. There's only 2 real ways that I'm aware of. One we will cover a little later on in this video, and the other is to invest directly through a company's share purchase plan. Now, not every stock is available as a fractional share purchase just yet. Wealthsimple Trade is starting out just with a handful of companies right now. There are 4 Canadian ones, and 3 of them pay dividends. You have Shopify, ticker symbol SHOP, it's the only non-dividend payer in the bunch. Then you have Royal Bank of Canada, ticker symbol RY, Toronto Dominion Bank, ticker symbol TD, and Canadian National Railway, ticker symbol CNR. There are also 10 US stocks that you can trade with fractional shares now, and 2 of those 10 are dividend payers. Let's start with the non-dividend payers first. We have Amazon, Alphabet aka Google, Facebook, Netflix, Tesla, Airbnb, Coinbase, and Nvidia. Of the dividend-paying American stocks that you can now trade with fractional shares, both of them are in the tech sector. We have Apple, ticker symbol AAPL, and Microsoft, ticker symbol MSFT. One point of interest for Canadian dividend gardeners is that now that you're able to trade fractional shares of Royal Bank and TD Bank with Wealthsimple Trade, it effectively means that all of the big 6 Canadian banks can be purchased with fractional shares. So that means that Royal Bank and TD Bank you can trade through Wealthsimple Trade, and then BMO, Scotiabank, CIBC, and National Bank can be purchased with fractional shares through those companies' own share purchase plans and DRIPs. Now, I mentioned one other way to purchase fractional shares in Canada, and the only other discount brokerage that I am aware of that offers fractional share purchases is Interactive Brokers, but to my knowledge, this is only on US stocks right now. Interactive Brokers has 2 commission tier structures that vary for Canadian and US stocks. Usually, I think that these would work out to be much lower commission fees for smaller investors. But up until this point, Interactive Brokers has had account minimums that I think really discouraged smaller investors from investing with their brokerage. There was a minimum activity fee of $10 per month that you had to spend in commissions. So if you didn't trade frequently, you'd have to end up paying the difference anyway. If you're only allocating $100, $200, $300 every month, that automatic $10 fee can really set you back whether or not you end up using it for commissions or whether it just ends up being an account fee. Now the key word there is had, because those account minimums are gone. So as of recording this video, Interactive Brokers no longer has that $10 a month account minimum. For a lot of Canadian investors, it could make much more sense to invest in US stocks through Interactive Brokers now that that fee is gone instead of any of the other discount brokerages. At the moment, I don't have an Interactive Brokers account of my own, but it's something that I might consider given this new change. You, of course, should do your own cost-benefit analysis as to whether that could make sense for you. So there you go, 2 changes that I think will lead to a lot more biodiversity in smaller dividend gardens. There's so much more work that needs to be done to make investing more accessible to everyone, but I'm glad that there are more and more options as time goes on. Don't forget, it wasn't that long ago that it would cost you about $29 to make a trade at a discount brokerage in Canada. So many people, myself included, would not be able to do any kind of self-directed investing at those rates. So before we go, which of these 2 announcements are you most excited for? Do you think that other discount brokerages will follow these changes or try to compete? Let me know in the comments below. I'd love to hear what you have to say. And if you enjoyed this video, please plant a like. It really helps the channel to grow. Of course, don't make any investing decisions based on what you see in this video. Always do your own research. I'm not a financial advisor, and this video is for entertainment purposes only. Thank you so much for watching, and we'll see you in the next video.